Let's jump right into it. What are the exact tax implications for crypto and crypto transactions? Exactly how do people actually file their taxes, and what things are tax liable?
Yeah, for sure. So the first piece before we get into the transactions is on the 2021 tax return on the very first page of your 1040. There's essentially a question that asks, have you ever done any cryptocurrency trading? It'll say like virtual currency. And essentially that box, if you click yes, and, actually, let's say this. If you click the box no, but you have been doing cryptocurrency trading, you've KYC'd in some of these exchanges, that's just an easy way for them to pop fraud into. So what I normally tell everybody is check the box yes, take fraud off the table, and then we can start getting into the actual transactions. Cryptocurrency taxes are actually pretty simple in theory, in the sense that only if you trade cryptocurrency, so you trade one crypto for another crypto, you spend cryptocurrency, or you sell it for US dollars, those are the capital gain taxable events. And then, of course, if you earn crypto from a business, or you accept cryptocurrency for goods and services, then that's taxed as income. And so those are the main sources. Of course, you got interest, dividends, possibly staking rewards. We're going to see how the IRS plays out with that. But for the most part, if you spend it, if you exchange it, or if you sell it, those are the main taxable events.
Oh yeah, and that's the very basics there. But I kind of want to jump to the advance, because I think most people, they understand capital gains. Okay, I understand that. But one thing I want to ask is, in the new digital economy, should the tax law sort of be edited for things like you just stated, staking, airdrops? Some of these things that are kind of in the gray area as far as taxes. What exactly are the tax implications for something like staking, or, for example, an airdrop?
So staking. So the way that it's been taxed when it comes to the IRS is that whenever you get staking rewards, that's considered income. And so there has been a multiple court cases, especially there was one, I believe it was in Tennessee, where it was a couple that said, hey, if I own real estate and I grow apple trees from my property and I grow apples from my trees, I don't have to pay taxes on the property that comes from my property. And so when it comes to staking rewards, if you have property, which cryptocurrency is considered property, and you have property that grows from your staking rewards, why are we being taxed as income on this? And the IRS essentially said, hey, you're correct. We will give you your refund. We'll give you some more money. But then the couple said, well, we don't want just our money. We want to make sure that we get to this actual principle. And so they said that we're going to take it to the higher court so that we have additional clarification from the IRS. We're still waiting on that. So when it comes to staking, as of right now, it's considered income, but chances are that will be changing going forward. We're just waiting for some more guidance from the IRS.
Oh yeah, yep, and definitely need that clarity so that people know exactly what to do. And with airdrops, I was having this discussion. I know somebody who received an airdrop, ENS to be more specific, and they did not know that they received that airdrop. So how is that with taxes, as far as how will it be taxed, or is it considered a gift? How are airdrops looked at under the tax code?
Yeah, so this is definitely a gray area, because technically it's not considered income until you have domain and control over your asset, in this case, cryptocurrency. So if you don't know that you've received an airdrop, then how would you even quantify that, because you don't have control over it and you don't have dominion over it, because it's not in your possession, because you don't even know that you have it. And so, when it comes to that, what I would normally tell people is, hey, if you receive an airdrop, I personally report it as income. There are some people who will say, hey, that's a gift. Some people will say, hey, that's a gift of equity. I just take the safe side as a CPA. I'll include it as income on my end, but if you decide to do something different, the IRS, they'll figure it out. I think the biggest thing is any transactions that are over $10,000, there will be additional tax enforcement in cryptocurrency for anything above that. So if we're talking about, a couple $100, or wow, I got a $20 airdrop, I personally report it, but if you don't, I don't think that you're the one that they're intentionally coming for. Just make sure you check that box yes on the front of your 1040.
Oh yeah, yeah. Just to be safe, absolutely. Listen to the CPA. Always be safe when reporting, just in case. And there's a few other technological advancements that have boomed over the last year. One of those being NFTs or non-fungible tokens. Those have become very popular. So please explain to our listeners, how will NFTs be looked at as far as taxes going forward?
So going forward, not quite sure as of right now. The way it's done is, so say if you buy an NFT, whatever you buy it at, plus the gas fees. People have asked me that about Ethereum because gas fees are really high.
Right.
The gas fees plus the cost of it is considered your cost basis. So that's the total price. And then if you decide to sell it, the difference between what you sold it at minus your cost basis is your capital gain or loss. Typically, that's done at the 20% level max for capital gains. However, if you're a high income earner, it may be considered like collectible art, and it may be a 28%. So higher if you bring in more money. If you are a creator of an NFT, then once you create it and then you sell it, and at that point, that's considered income. And then if you have residuals, that's considered like royalties, which are taxed at a lower level as well. But as of right now, that's what the NFTs are taxed at. It really, I feel bad for a lot of people who buy all these NFTs with Ethereum, and they're having to pay all these different capital gains with every single, purchase, because you're purchasing an NFT with Ethereum. So just be very, very mindful of that, especially when it comes to your CPA, because most of us charge per taxable event, and that can add up very quickly.
Oh man, yeah, yeah. I know a few people who have run into that problem. And one thing I wanted to ask about the NFT market specifically is there was a story that Melania Trump, she actually put out an NFT, and when they found out that the price of what it was bought at, they found that she bought her own NFT. So
Yeah.
we've seen this. Me and you, we've been in this market long enough to see where there's some wash trading with NFTs. People making the floor higher just by buying their own NFT. What would you say to those people as far as taxation goes? What are the implications for that? Because you said it's considered income, but if it's my own income that's paying for it, what do you do there with
Yeah.
that situation?
So I will say is that in this crypto space, as of right now, there is no wash rule. Like in stocks, if you know, you buy it at 60 and then all of a sudden it's at 30, and then you sell it at 30, you can't just rebuy it back to take that loss. You have to give it a certain amount of time. With crypto, you don't have to do that. You can do it instantaneously. So from a tax perspective, what I would tell her is if you create an NFT and let's just say you sold it for $100,000, at that point it's income. And then if you then buy it again from somebody else, or you have a different company, or you're doing all these different things, not only did you pay income on that, but then you may have to pay a capital gains tax on the sell of the next one. So you're really creating a tax headache for yourself.
Ooh,
Um, but I mean, if at the end of the day you make a big enough profit, it might be big enough to offset the taxes. Most people look at taxes as the very last string. It's not the first thing you think about, is what you think about on the back end. But if you're doing that, you got to take that into account for sure.
Oh yeah, a whole lot going on there, and that sounds like
Yeah.
an accountant's nightmare. Somebody comes to you with 100 NFTs that they've all wash traded themselves. I'm getting a headache thinking about it. But
Yeah.
moving on to some more technology, because again, this is such a fast moving market and fast moving sector. The tax implications sort of can't catch up. But DAOs, decentralized autonomous organizations, have become very popular in the past few years. How would a DAO be taxed since they don't have, the traditional business structure and there's no one entity to go after? How are DAOs taxed?
Yeah, so essentially they're taxed the same as a corporation. That's typically in Wyoming. From my understanding, like Wyoming's the only one that's really pushing forward with these DAOs. There are some other states that are trying to move forward. But for the most part, when it comes to DAOs, I would just treat them like corporations as of right now. You can possibly choose whether it's LLC. That might be taxed different than a C corporation. I think the biggest thing is to be consistent with whatever you do, be transparent with it. And then from a legal perspective, make sure that it's the correct legal entity. And I know Wyoming, they're big on that. But as of right now, there's no like huge difference between a normal business versus a DAO in terms of taxes, bookkeeping, reporting, things of that nature. You just want to check with your local state to make sure that you're complying with all of their local rules. But on a federal level, I'll just treat it the same as a corporation or as a flow through entity such as a LLC.